Today, we're diving deep into LuLu Group International. You know them, they're a massive retail powerhouse in the Gulf. We're going to break down the investment case, pulling insights straight from a recent equity research report.
So, here's the game plan. First, we'll get to know the company. Then we'll crunch the numbers on valuation, weigh out the bull and bear cases for investors, and wrap it all up with the report's final verdict.
All right, let's get right into it. First things first, who is LuLu Group? You know, their motto, where the world comes to shop. It really says it all, doesn't it? It perfectly captures their massive ambition. I mean, think about it. For over 50 years, LuLu has gone from just one store to becoming a real homegrown champion of retail all across the Gulf. And their physical footprint? It's just huge. We're talking 259 stores, and they're still growing. Most of these are those big hypermarkets you see everywhere. They've really become a household name, whether you're in the UAE, Saudi Arabia, or pretty much anywhere else in the region. And get this, that massive footprint brings in a ton of people. We're talking over 600,000 shoppers walking through their doors every single day. That's the engine that drives their whole business, right? It just creates this super consistent, reliable revenue stream. Okay, now here's where it gets really interesting. If you look at what they're selling, you'll see a key part of their strategy. Yeah, they've got all the global brands you'd expect, but almost a third of their sales, that's coming from their own private label products. And why does that matter? Well, it's absolutely crucial, because those in-house brands are way more profitable. It's a huge lever for them to pull to boost their bottom line.
All right, so we know who they are. Now let's talk money. Let's get into the numbers. For any investor looking at this, the big question is the stock a bargain right now?
So, check this out. Since its big IPO back in late 2024, the stock has taken a pretty serious tumble. We're talking down about 40%. And that, of course, has completely changed the valuation picture. It went from being this premium price new stock to something, well, a lot cheaper today.
And if you compare it to its peers, the story gets even clearer. What's kind of wild is that LuLu, despite being this absolute giant, is now trading at a big discount to a premium competitor like Spinneys. Its valuation is now much closer to smaller players like Union Co-op. Kind of makes you think, right?
Now, if you're an investor who's all about that dividend income, this next part is for you. Because the stock price dropped, the dividend yield has been pushed up to over 5%, and that's backed by a pretty solid policy. They aim to pay out 75% of their profits. That's a pretty juicy yield. Okay, so the valuation looks interesting. With that in mind, what are the actual reasons to be bullish on this stock? The report lays out 3 really key arguments for investing. Basically, the whole bull case boils down to these 3 powerful pillars. First, they absolutely dominate the market. Second, they're in a super stable industry. People always need groceries. And third, they have some really clear ways they can keep growing. Let's double-click on one of those growth areas for a second, e-commerce. This is a huge one. Their push into the online space is tapping into a market that is just, well, it's exploding across the entire region. And this isn't just talk. The numbers are there to prove it. A 43% jump in online sales year over year. That's massive. It shows their whole online plus in-store strategy is really working and adding more and more to their top line every single quarter. But hold on. It can't all be good news, right? Of course not. No investment is a sure thing. So now let's flip the coin and look at the bear case. What are the big risks here? And, just as importantly, how is the company set up to deal with them? Okay, risk number 1, competition. The grocery business is a dog-eat-dog world, no doubt about it. But here's LuLu's defense, their sheer size. It gives them buying power that smaller competitors can only dream of. Plus, they've got this huge loyalty program that keeps millions of customers coming back for more. So you might be thinking, okay, but what if the economy takes a nosedive? It's a fair question, but here's the thing. People have to eat. Groceries are one of the last things people cut back on, and with LuLu's focus on value, a downturn could actually work in their favor, attracting shoppers who are suddenly watching every penny. All right, let's be real. Profit margins in the grocery business are razor thin. It's a high-volume, low-margin game. But, and this is a big but, the key thing to remember is that LuLu isn't just sitting back. They are actively and successfully fighting to widen those margins. How? Through better efficiency, new tech, and yep, you guessed it, that growing private label business we mentioned earlier.
So, we've looked at the good, we've looked at the bad, we've weighed the bull case against the bear case. Where does that leave us? What's the final verdict from this report? After crunching all the numbers and weighing all the factors, the research report comes to one very clear conclusion for anyone looking at this stock right now. And that conclusion is a buy rating.
The report sets a pretty firm price target too, somewhere in the range of 1.75 to 1.85 dirhams, looking out over the next 2 to 3 years.
So, what does that actually mean? It means there's a potential upside of nearly 50%, maybe even more, just from the stock price going up. And get this, that's before you even add in that sweet 5% plus dividend yield. That dividend gives you extra returns and kind of acts like a safety net.
So when you put it all together, the report paints a picture of LuLu as this really compelling mix of income and growth that just happens to be on sale right now. It really leaves you with one big question to think about. Is this retail giant the missing staple in your portfolio?